What if I told you the world's next $16 trillion hedge isn't gold, isn't the US dollar, and isn't even real estate, but may actually be powered by 3 blockchain networks: Ripple, Hedera, and Chainlink? We're talking about a new kind of financial shield, one that could protect global wealth, reshape how institutions invest, and potentially trigger the next massive crypto boom. In this video, we're breaking down how these 3 projects might hold the keys to the financial system's future, and why Wall Street is quietly watching them right now. The global search for a new hedge. For decades, gold was the ultimate hedge. Then the US dollar took center stage as the global reserve currency. But today, with US national debt passing $35 trillion, inflation concerns, and central banks around the world reducing their dollar reserves, investors are asking a serious question. What's next? According to the Bank for International Settlements, hedge funds and institutional asset managers control over $16 trillion in assets globally. That money is actively seeking new safe havens beyond traditional markets. This is where blockchain enters the story. Unlike speculative meme coins, projects like Ripple, Hedera, and Chainlink are building systems that institutions can actually use for settlement, tokenization, and trusted data. If these networks succeed, they don't just grow in price, they become the hedge of the future. Deep dive project number 1, Ripple, XRP. Let's start with Ripple, the company behind XRP. Ripple's mission is simple but powerful. Replace the slow, costly SWIFT system with real-time blockchain settlement. Right now, cross-border payments can take 3 days, with fees eating up as much as 7% of the transfer. RippleNet can settle in 3 seconds at a fraction of a cent. This isn't just theory. Ripple is already connected to banks and payment providers worldwide. Names like Santander and Tranglo are exploring Ripple's tech, and rumors have swirled around Bank of America partnerships. But here's the key. Ripple isn't just about faster payments. It's about becoming the infrastructure layer for CBDCs, central bank digital currencies. In fact, several governments, including Bhutan and Palau, are already piloting CBDCs on Ripple's ledger. Now imagine a world where the US Federal Reserve or global banks use Ripple tech to move money instantly. That's not just another altcoin pump, that's a hedge. Becomes undeniable. Deep dive project number 2, Hedera, HBAR. Next, Hedera Hashgraph, often overlooked, but quietly building one of the strongest institutional ecosystems in crypto. What makes Hedera different? Unlike most blockchains, Hedera uses hashgraph consensus, which is faster, more secure, and consumes a fraction of the energy compared to proof-of-work chains like Bitcoin. But the real power lies in its governance. The Hedera Governing Council includes global giants: Google, IBM, Boeing, LG, and even Standard Bank. These aren't retail investors. These are Fortune 500 companies actually running Hedera's network. So, what's Hedera's play in the $16 trillion hedge? Tokenization. Real-world assets, from real estate and treasuries to carbon credits and commodities, are being prepared for tokenization. According to Boston Consulting Group, tokenized assets could reach $16 trillion by 2030. Hedera is already positioning itself as the backbone of this movement. Imagine buying fractions of a Manhattan skyscraper, a Tesla carbon credit, or a share of US treasuries, all instantly tradable on Hedera. That's not just innovation, that's a new asset class for institutions seeking stability. Deep dive project number 3, Chainlink. Now let's talk about Chainlink, the Oracle network that's often called the plumbing of smart contracts. Smart contracts are only as good as the data they rely on. If you're moving billions in tokenized treasuries or running a CBDC, you need trusted price feeds, interest rates, weather data, or even real-world delivery confirmation. That's where Chainlink comes in. Chainlink provides secure, decentralized data oracles that feed real-world information into blockchain networks. Without Chainlink, most DeFi protocols, and even institutional tokenization platforms, can't function safely. And institutions are already paying attention. Chainlink has tested integrations with SWIFT, the world's largest payment messaging system. It's also working with DTCC, the Depository Trust Clearing Corporation, which processes trillions in US securities every day. That's why Chainlink isn't just a utility token. It could be the data backbone of the institutional blockchain economy. And in a $16 trillion hedge scenario, data reliability is non-negotiable. The $16 trillion connection, here's where things get interesting. Ripple, Hedera, and Chainlink aren't competing, they're complementary. Ripple provides settlement infrastructure. Hedera powers tokenization of real-world assets. Chainlink delivers the trusted data layer. Together, they form a three-part system that could support trillions in institutional wealth. This isn't just crypto hype. This is financial architecture being tested by some of the world's most powerful players. If institutions move their hedge strategies into blockchain, these three networks could capture a share of the largest capital migration in history. The hedge of the future, gold hedged the 20th century. The US dollar hedged the 21st. But the hedge of the future may not be a metal or a currency. It may be digital, it may be decentralized, and it may be built on Ripple, Hedera, and Chainlink. The world's $16 trillion in hedge assets is searching for a new home. The question is, will these three networks rise to the challenge, or will Wall Street find another path? What do you think? Can Ripple, Hedera, and Chainlink lead the next crypto boom? Drop your thoughts in the comments below, and don't forget to like, share, and subscribe for more in-depth crypto insights.